Ladies and gentlemen, good day and welcome to the CAMLINFINE Limited Q1 FY22 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in a listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Navalgund from Nirmal Bang Equities. Thank you, and over to you, sir.
Yeah, thanks, Sandy. Hello, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome all the participants to Q1 FY22 earnings conference call of CAMLINFINE Limited. We have with us today Mr. Ashish Dandekar, Chairman and Managing Director, Mr. Nirmal Momaya, Managing Director, and Mr. Santosh Parab, CFO of the company. Without further ado, I would request Ashish sir to start with his opening remarks, after which we'll open the floor for Q&A. Thank you, and over to you, sir.
Thank you. Thank you very much. Welcome to our earnings conference call, ladies and gentlemen. As is our usual convention, we will start by having our CFO, Santosh Parab, give you the quarter's performance and the salient points, operational and financial. After which we will, in the system that has been explained to you, to open the floor for questions and answers, which will be as usual answered by Nirmal Momaya, Joint Managing Director. Thank you very much for joining us, and over to you, Santosh.
Thanks, Ashish. Good evening, everybody. Welcome again to the investor earnings call. Hope all are keeping safe and healthy. I hope that you have had a chance to review the financial statements which we have already uploaded on our website and stock exchanges. We have also uploaded the earnings presentation which has more granular details. As you know, the second wave of the COVID-19 pandemic threatened to dislodge the improving economic parameters. However, we are very happy to inform that CFS has been able to tide over this challenging situation with a resilient performance. The company clocked a marginal growth in the revenues of 330.83 crore as compared to the previous quarter. QM has seen unprecedented pressure of increasing raw material prices by almost 30% and logistical cost also increasing by around 2 to 3%. This has had an adverse impact on the margins of the company. The cost margins eventually declined by 451 basis points as compared to the sequential quarter. The company is usually able to pass on this increase in the cost to its customers with a lag of around quarter. We are assessing the trend of increasing raw material prices and the global supply chain challenges cautiously and would be charting the way accordingly. The lower gross margins also impacted the EBITDA margins, which were further impacted by one-time costs incurred in CFS Wanglong, our Chinese subsidiary which produces vanillin, amounting to around 3.50 crores, primarily on account of disposal of raw materials since the plant is closed and some non-operating costs. The resultant operating EBITDA for the quarter was 13.8% as compared to 15.7% in the sequential quarter. Despite the pandemic situation, the demand for our products globally has remained robust. Our company is also working on various new initiatives to enhance the basket of downstream products. Coming to our diphenol plant, the diphenol plant at Dahej has achieved 63% capacity utilization during the quarter, with the utilization reaching above 75% at the fag end of this quarter. The optimum capacity utilization of more than 90% is expected to be reached by the end of second quarter. The positive impact of diphenol plant is visible in the standalone results, where the gross margins have increased by 434 basis points to 41.8%, which was despite the rising raw material prices and logistic costs. Though the lower margins had a negative impact, gain in foreign exchange helped the profitability to improve by 237 basis points quarter on quarter. The profit after tax stood at 23.78 crore as compared to 15.72 crores in the sequential quarter. We were also able to protect the liquidity of the group despite the elongated working capital cycles and increased costs. The gross debt stood at INR 535.75 crore as on June 30, 2021, as compared to INR 537.89 crores in the end of last quarter. Cash equivalent as on June 30, 2021 were around 94.93 crores. We are also glad to inform that there was an improvement in our credit rating from BBB+ stable to A- stable. Our vanillin manufacturing plant in China remained closed during the quarter due to the order of Supreme Court of China regarding the infringement of technology by our partner. The review petition against the order is pending hearing and is expected to be heard in a very near future. Construction of ethyl vanillin plant at Dahej is in full swing with almost 35% of the project implementation achieved. Despite some delays due to the pandemic situation and cyclones, company is still confident of meeting the expected completion timelines. The company has been always focusing on the health of its employees during the pandemic. CFS India during the month of June carried out a vaccination drive for its employees, vendors and also some of its service providers, where more than 800 people were inoculated free of cost. Planning is also in progress to fully vaccinate all the employees in the coming future. In conclusion, we are confident of continuing the positive trend in the growth of the business. Thank you, and now we can open the floor for questions and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shikha Mehta from Equity Capital. Please go ahead.
Hello, sir. Congratulations on a great set of numbers in challenging time. I just had a couple of questions. If you could give some guidance on the tax rates for FY22. If you could also give some guidance on how we see our business playing out over the next 2 to 5 years, and any capex number for this year and for next year.
Yeah. So the tax rate, we expect the tax rate.
Can I answer, Nirmal?
Yeah, sure.
Yeah. So the tax rate as on a full-fledged basis and every synergy of all business are in line, the tax rate should be in the range of 25 to 27%. At present, it has been a bit high because there are some geographies which are making losses, and then intercompany sovereignty losses cannot be adjusted. So but on a full-fledged basis, it should be in the range of 25 to 27%. Nirmal, you can answer the next part.
Yeah. In terms of the business for the next few years, we've kind of laid out the path forward with the Dahej facility coming on stream, and now also the ethyl vanillin plant under construction, and going forward, expanding our business in the blends business as well as in the performance chemicals downstream products from hydroquinone and catechol, expanding capacities on those. We are on track for the growth that we've been guiding for the last from the last few quarters.
If you could also give some update on Wanglong.
On Wanglong, Santosh gave that update that the Supreme Court review petition is going to be heard very soon. In the next couple of months, we should have clarity on the way forward in China.
All right. And on Mexico?
On Mexico, I mean, it's going on stream, and it's we are confidently growing that business, and this year we should grow the business by 15 to 20%. Yeah.
All right. And capex figures for FY22 and 23, if we have any guidance?
Yeah. So I think the capex for the ethyl vanillin facility will be about 175 crores, and next year our capex plan between all the projects that we will undertake for the downstream products should be in the region of about 75 crores or so.
All right, so thank you. I'll come back in the questions.
Thank you. The next question is from the line of Ravi Mehta from Deep Financial. Please go ahead.
Hi, thanks for the opportunity. So Santosh clarified in his opening remark on the gross margin. So just wanted to understand more from the price hikes that is already taken with a lag. So should the gross margins be reversing back to the normal run rate?
So yes, there are 2 or 3 factors here which have impacted the gross margin. One is, of course, the raw material price, and second is the logistics cost. So logistics cost, there are 2 things in logistics. One is availability, and second is cost. Availability has been a challenge in terms of containers to even shipping lines to getting product on a ship with limited, availability. So that remains a challenge, availability, and cost, of course, has more than doubled on logistics. So which is again a challenge in terms of what typically used to be 2% logistics cost. It used to be about 2% of our sale has gone up to almost in excess of 4%. So, that has impacted the gross margin. And the second, of course, is the raw material and the lag in which we can pass on. So, yes, we expect that both the logistics cost as well as the raw material price increase that has happened, we should be able to pass on those in the next quarter and the following quarters. Also, we expect some of the raw material prices to also ease off in Q3 and Q4. So our target is, and I think it's achievable, is to be in that region of 49 to 50% gross margin, in the next coming quarters.
Okay, that's helpful. Also, probably this one-off the expense we had in China. So if all those going away, probably the EBITDA also normalizes.
Yes, correct.
I don't expect any other one-offs in coming quarters. I guess this was it, or?
Yeah, this was basically just, material in process and raw materials, which we had to then sell off at, of course, below cost because it was in process and, so basically those kind of hits, which was one time, was expected that there would be some impact. But other than that, there is no other, impact which is expected. So yeah, in terms of improvement in EBITDA margin, that is been impacted by almost 1% or a little more than 1%.
Okay. Thanks. I have more questions. I'll come back. Thanks.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Dimant Shah from One Up Finance. Please go ahead.
Yeah, thank you for the opportunity. One quick question. Sorry, just a clarification before that. The gross margin you shared that would stabilize around 45% mark, right?
No, it's about 45 right now. What we expect is that it should stabilize around 47, 48.
On a console basis?
Yeah.
Great. And how much would the value-added products or the downstream products, as you call it, what would be the proportion of sales coming from that on a normalized basis as we move forward?
So, sorry, I didn't follow. No, what was your question? Sorry.
The value-added products or the new downstream products, what would that be as a proportion of total sales?
So right now our sales is, I would say almost 200 out of the 330, about 230 would be value-added downstream products, and 100 would be basic hydroquinone catechol, roughly. Going forward, that will change also because we will do more value-added products, and especially with the ethyl vanillin coming up. I think that in itself will add another, once we convert that whole thing into at least about 4x of that, so 400 crores, and balance the hedge, about 35% capacity, will be another 200. About 600 crores or so will be added with full downstream products, when all the capacities are running.
And 200 would be the normal category. So 800 in total. That is what you are saying?
No, 600 more. I'm saying what we are selling as hydroquinone and catechol will get converted into the downstream.
Okay. And one intriguing question is, we have one listed competition who claims far superior margins and all of that, and we roughly have an overlap of 40-45%, if I'm not mistaken. So can you?
Yeah, the overlap is only 100 crores right now. 120 crores of 1,200 for 10%.
About 10%. Okay. But do you see any meaningful change in the equation as they introduce more products, or there is no likelihood of major head-on competition or whatsoever, or even impact on margins as far as we go?
As far as we are concerned, we are entering the MEHQ market where they are the leaders, and which will scale up as we go along. So we don't see much of a issue in terms of margin on the MEHQ, because that's a business which we don't have today, and we have a good cost position in MEHQ with our Dahej facility. So as we ramp up Dahej, we'll increase our MEHQ production as well as sales in the market. So that will add to the margin actually for us.
Yeah, but they kind of claim that their cost is far superior to anybody else, even close by. So would you kind of delve a little bit on this?
Yeah, so our cost is higher was higher in the past was only because of our raw material source coming from Italy. With Dahej, we are on a even keel on MEHQ. So, like I said, as when we do scale up MEHQ, which will happen in the next few months, our margins will improve on that.
Great. Okay. I'll come back in the queue. Thank you for answering these two questions. Thank you so much.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity. First of all, I would say a strong set of sales number what you have reported in a lean quarter. That is the highest ever sales. I would say this is a kind of strong number that we are seeing for the first quarter. So is it fair to believe, sir, this is setting a stronger tone for the entire year in terms of sales growth?
Yes, that's right. Typically the first quarter is slightly subdued, and going by that, and also on the development of all these downstream products and new products, yes, it is. The following quarters, Q3, Q4 will be stronger than the first two quarters.
Okay. And then we have in the recent past also have entered into new businesses or talked about the new business, like through acquisition of this algae-based nutraceutical company. And we have also indicated about our entry into MEHQ and calcium propionate. So if you can just share some sense, what are the kind of sequential progression that we would be seeing, or whether we have started seeing any kind of incremental number out of these, or when would that really be flowing in? Some sense on that part.
Yeah, so in terms of MEHQ, we are, as we scale up Dahej from the 65% odd to the 100% mark, which will happen in the next couple of months, we will start scaling up our MEHQ business. So incrementally, in the next 6 to 7 months, we should have some sales coming in for MEHQ. As far as calcium propionate is concerned, also we've launched the product, and we've got encouraging feedback from the market, and that also we start slowly scaling up during the year in the next 7 months. And the Algalar, we just took control of the plant. We are understanding the production cycles and fine-tuning, what we need to do in terms of scaling up capacity. So the revenue really will start coming in from October onwards, which also we will scale up with some small debottlenecking, which is in the pipeline in the next couple of months. And the revenues should start flowing in, like I mentioned, from October onwards.
Okay. But is it fair to believe something like around 10% of the sales can be contributed from all this new effort, and the base business can see its own natural growth progression? Is it that fair number, sir?
Yes. I think all these businesses, the new businesses put together, contribution over 100 crores, yes. It would be fair in that region.
Okay. Then I think given the kind of, even if we annualize the first quarter number and the incremental trend, what we generally see in the second half versus first half, which will further be complemented by this, then kind of a strong over 20% kind of a growth is a certain visibility, given the 8% kind of YY growth in the first quarter, what we are seeing.
Yes, that's right. Like we did mention that we are targeting between 1,400 to 1,500 crores should be the top line.
Sure, sir. Okay. The next question is on the margin front. Santosh sir, if you can just clarify this 3.5 crore one-off number that you have mentioned. It was relating to material also. You said something operational also. So in which line item that is there?
So around 1.5 crores is in consumption. So this was regarding the heat on the raw materials and intermediaries which we sell. And also certain non-operating expenses happened on cleaning up the factory and other things, which was around 1.5 crores. So 2 crores. So 1.5 is in the hit in the consumption, and the balance 2 crores is in the hit in the other expenses.
Okay. Then my next question from here, sir, about margins. So we have obviously mentioned that, okay, this is a one-off element that is there in the overall margin. And there are elevated cost, freight as well as RM, part of which can be passed on in the subsequent quarter, which can be mitigated. But I'm just trying to understand whether the impact of catechol is also there. Why? Because till the time that we will not be doing vanilla, so that would be coming as a kind of a product, and are we building inventory of that, or it is sold in the market, and hence some impact of the margin, impact on the margin that would be seen, some sense on that?
Yeah. So of course, since the vanillin has been discontinued, we are selling catechol in the market. What we did first anticipate was that whether we'll be able to liquidate all of that what we produce in the market was a bit of a question mark. But fortunately, we've been able to kind of overcome that, and we've been able to liquidate, and we continue to liquidate the catechol in the market. So yes, that has impacted the margin because when you convert it to vanillin, we were getting a better realization for catechol than what we sell in the market at. So, but of course, that gets corrected as soon as our entire vanillin facility starts. That gets corrected immediately.
Okay. Just then, if you can clarify about your commissioning of the progress of the setting up the progress in terms of setting up the vanilla plant, because we have seen a peak COVID phase recently. So whether that had impacted the implementation of that new project, and if that it is implemented, even if we ignore for the time being in the China facility, which is uncertain, which is currently under sub judice. So then what incremental business that we can get from the Haze Vanilla unit?
Yeah. So the progress is good on the project. Of course, we did have some problems with COVID, and especially on the oxygen side in the second wave, where industrial oxygen was not available for a few months. And of course, the cyclone which hit. And so yeah, there was some problems, but really speaking, not much of not a very big issue. We are looking at starting the plant by April. We should be ready to start commercial production. That's the estimate that we have. And in terms of sales, I mean, it's like, our capacity will be 6,000 tons. And of course, at today's market prices of vanillin, I mean, they're crazy, but that's not going to remain, because when we come with supply, we will bring the prices to normalized levels. We expect 300-400 crore turnover next year, additional coming from the vanillin business.
Okay. Sure. Yeah. Thank you.
Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah. Thank you for taking my question, sir. So my first question is on the hydroquinone side. Since the hydroquinone prices are at almost all-time high, what kind of advantage or disadvantage it provides to us in terms of sourcing it from outside or selling it in the open market? And how much we are in position to pass it on, and maybe what kind of time lag would be there?
Yeah. So hydroquinone prices have gone up, and yes, you're right. I mean, they are at all-time high in the last 2 months. So yeah, it of course gives us a bit of an advantage, but I mean, really speaking, even the raw material prices have hit all-time high. So in that sense, it's kind of offset by that.
Okay. So nothing incremental kind of benefit we should expect from this? Am I right?
No, not really. No.
Okay. And on the U.S. business side, and we have done exceptionally well in this quarter. So is it because of some new contract or new approval clearance, or it's a pent-up demand amid this pandemic situation?
It's not really any new business contract that we've signed for our blends business. It's more on the hydroquinone. We've started establishing a small market in the U.S. for hydroquinone, where they're doing local stock and sales, and that is what has given us a bit of a higher sale in the U.S.
I mean, we are selling hydroquinone from U.S.
Yes, that's right.
Okay, and that is supplied from our Italy plant, or it is from the
from Italy.
Okay.
The edge is only captive. We just use it for our downstream products in India. We don't sell the edge, hydroquinone or catechol in the market right now.
Okay. And lastly, on this Infinity Holding side, and have we procured anything from Infinity Holding funding during this quarter, and probably how much is remaining? And maybe, where we should be expecting our debt profile to look like by the end of FY20, considering this Infinity Holding money into account?
Good.
Yeah, so as far as Infinity money is concerned, they have to invest before 15th of March 2022. We have been calling the money as and when required, but it's highly likely that, rather not, it's certain that the entire shares, balance remaining shares of around 2.90 crores will be issued to Infinity on or before 18th of March 22. At present, as you know, 61 lakh shares, that is around 4%, they are already invested and shares have been issued. The balance will be coming. We are drawing the money as and when required. as far as loans are concerned, ECB from IFC, we have already done 5 million, drawn 5 million for our retail vanillin project last year. The balance 10 million will be drawn in this year. So that would be an addition, and that is going to be utilized for retail vanillin. We are also contemplating an increase of around 30 to 35 crores on our working capital borrowings because of increase in business. So at this moment of time, that is what is the expected increase in loans by the year end.
Okay. Thank you. I will come back in here. Thank you.
Thank you. The next question is from the line of Deep Master from One Up Financial Consultant. Please go ahead.
Yeah, hi. Thanks for my question. So I just wanted to touch a bit on the blends business. I think, I guess due to COVID and the disruptions, we've kind of not seen growth in FY21. But, it's tough for us to figure out the blends revenue in the quarter. If you could just share the number for that and also give us an outlook. Because I think, that's the part of the part of our business that's not well appreciated, because that's the branded part of our business, and kind of gives us a lot of stickiness in our revenue. So could you kind of give some outlook in the medium term on blends, and maybe if you could also touch on some of the key markets and the developments that you're seeing there.
Yeah. So in the blends business, in this quarter, I think it's about 80 crores odd is the blends.
81 crores.
Yeah, 81 crores. And so because of the whole situation from last March onwards, where there was a lot of restriction on movement, visiting customers, to starting new projects or keeping new projects on hold, that in the blends business, a lot of interaction is required, which is physical in nature with customers. I think with the vaccination drive across the world, what we are seeing is that slowly things are opening up. People are allowing visitors who are double vaxxed to come in and start interacting with their staff and into their plants, and so a lot of new products that we have developed, which we have a lot of potential in terms of market. But of course, we couldn't do much work in the last 15 months. It has now started. So we are already seeing that all our salespeople are now on the ground running, meeting customers, and what we had estimated as growth to be in the region of in excess of 20%. I think we start clocking that from Q3 onwards, because all these projects which were kind of kept on the back burner have now started opening up again. So in terms of geography, our strength really is in the Americas, more in the Central and South, and now North America as well. So those markets have kind of more or less have kind of opened up, and our people are visiting customers, and so we'll see that growth that we anticipated in these markets without an issue. We're also now putting a lot of focus on developing the Asian market. We started, we have a JV with the Malaysian company, so we started now doing business in Malaysia. We've kind of got some new customers in, and those are looking promising. Similarly, we are registering our products in Indonesia and in other parts of Southeast Asia, where those registrations also should come through in the next few quarters, and we'll be in the market with the blend in countries like Vietnam, Philippines in the next 2 or 3 quarters. So a lot of work going on in East Europe, also to establish and to get registrations there, as well as in the Baltics. And so, yeah, I mean, we are focusing on different markets and developing a distribution and registration base in the next few quarters, so that in the midterm, we are well established in these markets to grow the blends business by at least 25% a year.
Right. So given the lag, in your sort of sales team interacting with the customers, and but also the pressing need for many of the customers to kind of reduce their costs given the inflationary scenario across the world. As and when the interactions begin again and you regain traction, shouldn't the growth from FY23 be much stronger than 25%? Given that we come with a much lower cost base, as well as the lag that we've seen over the last 2 years.
Yeah. So yes, I mean that would be if conditions improve as we hope they do, and things do improve. Yeah, I mean it's very much possible to grow it further than that. Also, what we see is that in many countries there are tariff restrictions where blending tends to be more localized because of the tariff import tariff. So going forward, the business model will necessarily be small blending units in different parts of the world to service markets which have a free import tariff within a block of countries. And that seems to be working well, like we've seen Mercosur in South America, where Brazil can supply to Chile and Argentina and to other countries, neighboring countries, without significant tariff issues. Similarly, Mexico can do in Central America. Southeast Asia, Malaysia can do Southeast Asia because they're again a part of the ASEAN countries where they have a tariff advantage. So yes, I mean potentially much more than 25%. But given the uncertainties that are there right now, difficult to say. If things do get normalized, surely I mean the possibility is much greater than that for us.
Sure, that's helpful. And on the downstream side, and just connecting to an earlier comment you made on your margins in a product such as MEHQ with the Dahej cost structure. So if your cost structure starts to align with your competitors that has a much healthier margin, and you also alluded to the fact that your value added to your downstream products will kind of amount to another 600 crores once vanillin and the other products come in. So the margin swing, in my estimate, could be quite dramatic. So any more color on what steady state margins could kind of look like once the downstream is kind of built out in an FY23 scenario?
Yeah, so I mean that's what we're saying that surely it will be significantly better than where we are. Where will it go and end up at will depend a lot on what the competitive landscape will be in terms of market shares as well as pricing. So, but it's safe to assume that we should be close to like we always mention, high teens to 20%. I mean, we should certainly be exceeding that in FY23. Yeah.
Sure. Thanks a lot. And just a last one on the downstream. So on a run rate basis, by when would we expect the contribution to come in from vanillin and some of the other new products?
Yeah. So like MEHQ, I mentioned MEHQ, calcium bicarbonate, the others the other downstream that we have right now. From October onwards, we will start seeing contribution. Vanillin will start from April next year, as well as there are certain other products like HQE and other downstream products where we are seeing we're winning some new contracts in those businesses. So yeah, from October onwards the contribution will start, and the bigger one will start from April onwards when the vanillin starts.
Understood. Thank you.
Thank you. The next question is from the line of Niranjan Gajanan Sakarkar from Equitas Capital Advisors. Please go ahead.
Yeah, thanks for the opportunity. I had a couple of questions. The first one on the performance chemical segment. Could you give me a sense if MEHQ is the only chemical to drive the growth, or are there any other main products in this category which will drive the growth? And what would be the growth rate on this segment?
No, I couldn't understand.
Sorry. On this performance chemicals segment, which are the main key chemicals that will drive the growth? One is MEHQ. Any other one?
Yeah, so we have several products. We have MEHQ, we have HQE, then we have PDMB, and now we're getting into forward integration of that into Naphthol ARG. We have Veratrol, we have Guaiacol, TBC. So there are at least about 8 or 9 products which are in the downstream, which will contribute to the growth.
Okay, and what growth do you expect in the segment over the next, say, 3-4 years in performance chemicals?
Yeah, so in performance chemicals, I mean, in this downstream part, like you said, aroma and performance go hand in hand in that way. Between all of these, about 600 crores is what we are saying.
600 crores. Incremental, right? Or total 600 crores?
Yeah, incremental over the next 2 to 3 years.
Okay, I understand. And the other thing was, on one segment, you expect to gain market share from Solvay. Is that understanding correct? Since you're the lowest cost producer in coming future?
Sorry, I couldn't hear. Your voice is not clear.
In the vanillin business, since you claim to be the lowest cost producer after Dahej, can we expect to gain market share from the Western players like Solvay, the biggest player?
Yes, absolutely.
Okay, and what growth do you target in the vanillin segment?
So what we are looking at is, having about a 30% market share.
Okay. Thanks for that. Thanks.
Thank you. The next question is from the line of Dhruv from HDFC AMC. Please go ahead.
Yes, sir. Thank you so much for the chance. So one question was on the vanillin part. So currently a China capacity was about, I believe, 4,000 to 4,500 tons, and it was operating at about 60-65% CU utilization. This, I believe, this capacity has been there for quite some time. So what gives the confidence that we will be able to ramp up the new India facility relatively fast once that capacity is up and running?
Yeah. So basically, the market right now has really become very, very tight on both ethyl vanillin and vanillin. And all major customers are anticipating our capacity to come up and are looking to de-risk their situation, because the other 2 players in the vanillin market have kind of, jacked up their prices to over 100% of what it was when they were a 3-player market. So, which kind of has disappointed all the customers that, temporary exit of one player, if the prices go up by 100%, it really makes no sense. So it is, they need to support and sustain a third supplier very clearly, and which is what we understand very clearly now. So the ramp up that we expect is much higher and much faster than what we could do in China, because of 2 reasons. One, what I just mentioned, and second is they're looking not to put all their eggs. So we were also a Chinese player for them, so it was not an Indian product. It was a Chinese product which was in the market, competing versus 2 other players, Solvay and the other producer in China. And this gives us a position of being an Indian product, which is again not the same as buying a Chinese product. And that is also of great interest to all the large consumers, that they want a China plus one supplier, and which is what we are, as well as what has happened in the past few months has kind of made it very clear to them that Camlin should play a very key role in this supply chain for them to sustain their businesses.
Got it. And are there any approval processes for the capacities
Yes.
Does each customer have to approve it separately, or how does it, some color there?
Yes, I mean, they have to approve it because for the sensory part, and typically that takes about a month or so for them to approve.
Okay, that's quick. That means it's not a lengthy process.
So you know what, getting in is always a problem till you get your company approved, and this that takes a long time. But having done all of that, and they knowing us, and they're very keen also to have this new supplier in place. So everything then it's the other way around. Everything gets fast tracked.
Got it. And so most of the demand for, two questions, sorry. Most of the demand for vanillin, is it, where is the demand coming from for vanillin? Landscape of demand for vanillin, of a total demand, say if it's 100, where is the most of the demand?
Demand is from flavor, fragrance, and pharma.
But by region?
By region, the largest consumer of vanillin is US. Second would be China. And Europe, almost the same size. Then India and all the developing markets are all consumption of vanillin is growing rapidly in those markets.
Got it. And so the last thing was, so I understand you expect the approvals to be fast and the ramp up to be fast. But so was there a bottleneck that the earlier capacity, which was relatively smaller, versus the new that we are planning, was operating at a lower utilization? Was there a RM bottleneck or something else which was constraining?
No, it was the market.
Okay. Got it. So, okay. So then if that capacity was operating at 100% for a very large, despite being there for quite some time, so when we say 400 crores, I believe that's the number you are giving for the vanillin potential, vanillin capacity. Would it be year one, or should we expect it on a gradual basis, this 400 full potential?
It will take 2 years.
Okay. And this 400 crores, when you say, is it at 100% utilization, or broadly 100%, or at a bit lower utilization?
So, it depends on what the prices will be at that point. It's difficult to say. Today's prices, it's 1,000 crores, but I can't guide on that because I don't know what the prices will be when this comes into the market. So today the prices of ethyl vanillin are $25 and vanillin is $24. And if you say 6,000 tons of $24, it's more than 1,000 crores.
So probably if you can help us from when the point that you calculated this 400 crores.
That was at $10.
Yeah. So is that at 100%? So I'm trying to understand how should the utilization be. So is this at almost 100% utilization?
Yeah.
Got it. Sure, sir. Thank you so much, sir. Thanks.
Thank you. The next question, participants will be requested to restrict your questions to 2 per participant. The next question is from the line of Dhruv Shah from Amica FinCap. Please go ahead.
Yeah. Hi. Santoshji, as you mentioned that we pass on the cost increase by a quarter's lag. So are we seeing Q2 will also be challenging considering phenol prices has not fallen down and it has actually gone up further?
No, it hasn't gone up further. It has remained more or less the same as it was in Q1. So what we expect is in Q2 we will be able to pass on some of those. We are in the process of passing it on.
Right. But Nirmalji, we have seen gross margins of above 50% as well, and with all the downstream products and the age going to 100%, and with the new initiatives we are doing, and we are still guiding something around 47 to 48%. Isn't it too conservative as far as the gross margins are concerned?
Well, I'd like to err on the conservative side. So, potentially yes, but it's a very fast-changing scenario with all these cost structures getting challenged. We've never seen something as volatile as this. So it's better to be conservative and look at it. Of course, potentially it could be 5-7% higher than that if everything goes in the right way. But these times are so uncertain, and nobody expected this kind of logistics issues, these kind of raw material price increases. It never happened before.
Right.
Completely, we live in unprecedented times, so that's why guiding something which I don't know really. I can hope that it will be 60% gross margin, but will it be? I don't know really. It's so difficult to say in these times. Yeah.
Right. And my last question will be on LGIR. Are we planning forward integration, or do we want to first establish ourselves in Omega and then look for forward integration? I just want your outlook on the fermentation part.
See, on the fermentation forward integration, not really, because we will make the Omega and sell the Omega to formulators. I don't think we want to get into the formulation business in the near future.
Okay.
What we want to do really is that once we establish in Omega and establish our fermentation process in Omega, look for other products in fermentation where we know that we have a good opportunity, and we're working on those in the labs and getting those ready. Once we've kind of commercialized the Omega, then we'll look at the next set of products.
Okay.
But I don't think we'll get into the formulation side. I mean, that's a very, very different business.
Right. And how is the ramping up going on there? Like you mentioned that from
It
Q3
just started.
we should see ramp up.
We've just started. We've just taken control a month ago, so it's just in the process of starting.
Okay. Thank you, and all the best for the future quarters. Thank you.
Thank you. The next question is from the line of Madhav Marda from Fidelity International. Please go ahead.
Yeah, Mr. Nirmal, good evening, and thank you so much for your time once again. I just wanted to ask a quick update on the Lockheed Martin project. Anything is, if there's an update there?
No significant change. It's on track. In fact, for the first time, somebody from the US has traveled right now and are visiting us after almost a 15-month gap from their team. So the interactions now, physical interactions again have started. So, but other than that, yeah, it's on track for what we've said in the past, that 1,500 metric ton facility will be set up, and in the meantime, interim requirements of theirs we will try and fulfill from our existing facilities.
And you're expecting some revenue from that to kick in FY23 from like a pilot plant, or that's going to be like FY24?
So we will see some revenues coming in FY22-23, but FY24 will be when the 1,500 metric ton plant will be ready to supply.
1,500. Okay, so how much revenue potential does that have? Any ballpark would be interesting.
The pilot plant, that is a pilot facility, 1,500. That will be ballpark about 120 crores or so. But that's just a pilot plant for them. And then, of course, the big plant will be probably 10,000 tons, which, of course, potentially will be a 1,000 crore business.
Okay. All right. Thank you so much. Thank you.
Yeah.
Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah. Thank you for the follow-up. Just wanted to understand the employee increment policy for us and when it is actually due for our different geographies.
Santosh, you want to go?
So generally, in the American continent and European continent, generally the appraisals happen at the end of the year, and it's a January cycle. While for India, it is a June to May cycle. So generally, increases happen in June. Because of COVID, they are delayed. So generally, we are looking at a 10 to 12% average increase on salaries. So India level, next quarter, there is likelihood of increase of around 10% appraisal. And similar kind of appraisal will happen in the first quarter of, last quarter of this year for European and American business.
Okay. Thank you for that clarification. That's it from my side.
Thank you. The next question is from the line of Viraj Vachatkar from Validus Wealth. Please go ahead.
Yeah, hi. Sorry if it may have been covered, but this the 35 million one-time costs for the CFS Wanglong, that is pertaining to the shutdown in March, right? Or the infringement on IP.
Yeah.
Okay. And in the March quarter, I think it was expected that the judgment was supposedly coming by September. Is there any update on that?
Yeah, we are expecting the hearing to come up in the next few weeks. So don't know when exactly the order will come, but hopefully in the next couple of months.
Okay, fine. And one last on the CFS Wanglong facilities. Is there any possibility of refitting those factories for some other products, if not vanillin?
Yes, absolutely. We have some other downstream products from Concall which we can repurpose that plant without really significant investment. That's in the pipeline. If we don't get a judgment soon, and if it's going to be delayed for a long period of time, then we'll just start making that product in China.
Okay. Got it. Thanks. Thank you.
Thank you. The next question is from the line of Pallavi from the Consulting Point. Please go ahead.
Yes, sir. Thank you for taking my question. I just wanted to understand on the raw material side, the phenol sourcing is, what the kind of contracts do we have there? Are they annual, and what percentage would be bought spot, and how much would be imported versus local for the Dahej?
For Dahej, our contract is annual. It's all local.
All local. Right.
Yeah, and the price changes every month. But the supply is annual contract.
Okay, right. That's all from my side. Thank you.
Thank you. The next question is from the line of Abhay Musare from Individual Investor. Please go ahead.
Thanks, sir. Good evening. I just want to know about the capacity utilization about the Dahej plant. So it started in September 2020 and still its utilization around 75% only. So when you were expecting to ramp up? Because in the Q3 guidance it was given that it will be around 90% by Q4 FY21.
Yeah.
This is the first question. And second question is regarding the tax rate. As you have mentioned that the tax rate will be around 25 to 27%. When it will be in that range? Any in FY22 or FY23?
I'll answer the first question. The ramp up is in the process. We're at about 70%, which we will take to 100% in the next couple of months. And on the tax rate, Santosh, you can answer that. He's already answered that in the first.
In any case, I just touch upon it. The ideal rate of 25 to 27 will be likely in next financial year.
Okay. In the current financial year, where it will be?
It should be around 30%.
Okay. Thanks. That's it from my side.
Thank you. The next question is from the line of Sharad Singh, individual investor. Please go ahead.
Hi, sir. Good evening, sir. So what is the market size of the vanillin market?
I couldn't understand your question. No, sorry, couldn't follow your question.
Sorry, what is the market size of the vanillin market?
Vanillin market is 30,000 metric tons.
So we in revenue, can you tell me the revenue figures? I mean, the in terms of rupees or dollars?
Yes, it's very difficult to say. Today it is worth $600 million because the prices have doubled. But till a year ago it was $300 million.
So on a normalized basis, we are aiming for 30% share of a $300 million market.
Yeah, we are between 20 to 30% is what will be our market share.
Okay. And sir, regarding the Alga IR acquisition, what is the kind of product we'll be entering into? As in, will it be just omega-3 or what is the kind of industry we'll be targeting with that company?
So I mentioned that in the last, somebody asked that question, that we are focusing on omega-3 to start with, and then we'll add new products in the fermentation. The industry is omega-3 is primarily for human health supplementation of omega-3 and some in the feed additives.
Sorry, I missed the last part.
Feed additive, animal feed additive.
Okay, animal feed. And so what can be the margin in that EBITDA level?
Right now it's early to say because we are yet scaling up the process.
But would it be fair to assume they'll be higher than the current normal business margins overall?
It's very difficult to really comment on it because since we've just taken control and it was a plant which was shut for some time, we have restarted it, and so we'll have a better idea. Once we are ready, we will inform you.
Okay. Thank you. Thank you. All the best.
Thank you. That was the last question. I now hand over to Mr. Abhishek Navalgund for closing comments.
So thanks. Basically, I would like to thank the Camlin management for giving us the opportunity to host this call, and also thanks to all the participants for joining in. Thank you.
Thank you.
Thank you.
Thank Thank you very much. On behalf of Nirmal Bang Equities, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.